After a bit of a relief rally, Cardano's ADA continues to pull to the downside. In this video, we're going to be jumping down into the technical analysis of ADA to take a look at what's been going on most recently and what I personally think is going to happen next. As I get into this video, if you find it useful and informative, smash the like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe? By tapping the bell and selecting all the notifications, you will be kept up to date with all the videos that we do here at Cheeky Crypto. If you haven't joined us in Discord, check it out, link in the description below. I don't think you'll regret it. Let's go ahead and jump right down into this video. So Cardano's ADA paired up with USDT on the spot exchange 1 hour chart, and 𝗕𝗘𝗪𝗔𝗥𝗘 is our data source here. Okay, these are really important that we kind of talk about what exchanges that we're on and what kind of pair that we're on, because prices will fluctuate from exchange to exchange, and whether or not you're using a spot pair or whether you're using a contract, for example, leverage or spot trading. So in this example, we're using 𝗕𝗘𝗪𝗔𝗥𝗘 because it's my go-to trading platform, both for spot and for leverage, and we're using it on the 1 hour chart with USDT pair. Okay, so if anyone wants to replicate the analysis here, those are the settings that you're going to need. Let's take a look at what's been going on. Right, so we're going to start with smart money concepts. Smart money concepts is the idea of tracking big money movements in the space, i.e. big money has entered or exited Cardano, and we can kind of see what price is likely to do based on that. Okay, I did a whole course and I put this together to help people understand what smart money concepts is. That's also linked in the description below if that's of interest. So what we're going to do is we're going to just reflect on what's down here, right? So as we can see, these two green areas, these are created from an imbalance in the order book. Okay, let's actually go over into 𝗕𝗘𝗪𝗔𝗥𝗘 and just kind of show you and explain what that looks like. So let me go ahead and bring up my 𝗕𝗘𝗪𝗔𝗥𝗘 data, or 𝗕𝗘𝗪𝗔𝗥𝗘 exchange, I should say. So here we have ADA and USDT. This is spot trading. Okay, so this is exactly what you see down in TradingView. In fact, this is a TradingView chart right here. Okay, and what we want to do is we want to reflect on the smart money concepts, right? So we know that there's a couple of gaps that are left behind here. And the other one is, if I can even see where, I can see, is it this little gap here? It might be that little gap. There's one there, and then I think there's a little slither right inside here. But for the most part, those are the two gaps. Let's go ahead and draw them on. Okay. In fact, for the most part, I only really need to talk about the one because that's going to be the example of what I'm going to use here. So this particular area, okay, coming in at 24.3386 and 24.7620 is what is called a fair value gap. Let's just bring that back up on the chart here. You can kind of see the one down at the very bottom is the one that I've just drawn up on here. Okay, so when we take a look at that, that's the gap, right? And that gap is created because there's an imbalance in the order book. So you've got the red sellers here, and then you've got the green buyers here, okay? This is an order book, not a market trade. These are your market trades. This is the order book. So in the order book, these are people who are going to sell ADA at specific prices, and these are people who are going to buy ADA at specific prices. When the price reaches the correct area for sellers, then they'll sell their ADA to people who are doing market orders, for example. And people who are doing the buy orders are going to buy when price hits that area, as long as there's sellers in that range as well. Okay, so when we have an imbalance in these order books, i.e. There's too much buying pressure and not enough selling pressure, price has to move from the low side to the high side. It has to find liquidity. It has to find people who are willing to sell. Okay, so these gaps get left behind when the market is illiquid. In a liquid market, price is actually really stable, has lots of overlapping candles, and for the most part, people can buy and sell without causing any disruption to the market. When a market is illiquid, it is essentially causing these big spikes in the market, and we can see specifically over here, for example, where this big red candle was, that there was an illiquid market, lots of selling, not enough buying. So price goes down, and it goes down sharply. Okay, so when we understand that there's an imbalance in the order books and we see these gaps that get left behind, well, the price likes to come back down. It likes to come into these areas, and it likes to put liquidity where liquidity was not. Okay, so it's not a guarantee, it's not something that always happens, but it's something that we know from time and time again that more often than not, price likes to come down and fill the gap. Okay, so when we have a gap like this, or whether you have a CME gap, which is a difference between an open and closed position on the futures market, you can see here that there's a fair value gap that's created from what we call smart money, and price will like to come back down and fill it out. Okay, and this is visible if you really study order books on exchanges, and you can see these things and where they're likely to occur, and yes, whole trades strategies that can be built around order book. But essentially there's actually some better tooling rather than just going straight to an exchange. It can be done here, but there are better tools out there, usually come at a bit of a cost. But ultimately, as we can see here on BitGet, there's a gap down here. Price is more than often likely to come down and fill that gap out, and you can probably see that within this price range here at 24.3 to 24.7 in the order book, at some point you'll find a lot of liquidity sitting in that range. Okay, so let's go back down into our charts, right? So now we know that there's a fair value gap right in these two ranges here, and we can see that price is heading down towards that range. We understand that there's a probability that we are more than likely going to go ahead and fill that out. We can also note that we've got some fair value gaps here, here, and here. These are higher in the price chart, which means at some point in the future, price is likely to come all the way back up to this higher range around 35 cent to 37 cent and fill that gap out there as well. Again, it can't be left behind forever. The question becomes, is it going to take, months or years to go back into that price range, right? Or is it going to happen much sooner? Now, in the case of Bitcoin left some fair value gaps for well over a year and a half before going back and filling them, right? They filled, but it took a very long time to get there. So in the case of Cardano here, it's more important to focus on the ones that are close to us and whether or not we have a probability of moving to those higher ones at some point in the future. Ultimately, smart money concepts here shows us with a bearish structure, but we haven't got a confirmation of that just yet. We can see that with a change of character, and we're waiting for a confirmation of that. That's likely to happen if we continue this move to the downside. We're below the 50 EMA, we're below the 200 EMA, we're below equilibrium, and there's a lot of selling pressure here as lots of fear seeps into the market. You can see lots of red on this chart. This essentially tells us that the sentiment behind Cardano is fearful. This is obviously no surprise with the SEC attacking Binance, calling Cardano's ADA a security. Obviously, it's nonsense. We know it's nonsense. It's not really something that can be held up in court, in my humble opinion. But, we'll see how that kind of goes over due course. And of course, everything that's going on with Ripple and the SEC is also of interest, because if Hinman was basically going rogue, as the emails would indicate, then essentially that means that the agency has corruption at the highest possible levels, and as such, maybe that's going to be used to kind of say, maybe Cardano is not a security, and maybe the SEC are overstepping and overstretching again. But time will tell. Let's move over. This time we're going to switch to Binance as our data source, because it's got most of the analysis for where I think price is likely to go. So let's go ahead and just reflect on a few different things here. We have ourselves 5-wave structure. I think for the most part, we are looking at this as a 4th wave movement with a 5th wave expectation to the downside. So if we go ahead and draw this in, we can see that my expectation will be that price has to kind of come down pretty deeply here. And unfortunately, this is going to be more towards the 18.56 to 20.62. And the only way that I see that getting broken is for price action to kind of come up higher than, let's snap that in there, and just remove a few of these other lines. One sec, let me just get rid of that. And I will want to get rid of this one here as well. Might as well get rid of that. Don't really need this one now. Get rid of that, okay. And that one and that one can go. Oh, this is like a big cleanup for me. I'm going to leave the 22.23 there. 31.77, right? So unless price goes up higher here than 31.77, unfortunately, we're probably more than likely having to move down to our range in that low area. Okay, so for the most part, I think 18.56 to 20.62 is where Cardano is likely to go. Looks like this bounce to the upside is almost over. It can still go higher. It's not an end of the world situation at the moment, because we can of course still articulate this as a potential move up towards 30 cent. But for now, I think we have to be a little bit more cautious. We'll see how it kind of plays out. But for now, I think 5th wave movement heading down towards 20 cent, I think is kind of where that is heading, in my opinion there. I'll leave the yellow box on there for now. And as you can kind of see, this is a potential problem for Cardano. I think we enter into the world of triple zigzag, and as triple zigzag would go, we're talking W, X, Y, X, and Z. So we go ahead and go W, X, Y, which will have to be down here. Probably it's hard to actually place. Might actually be all of this as a Y. Could actually be all of a Y. Then X, then Z. We just need to do some sense checks because we can't really hit 1.618 if we want W, X, Y, X, Z. So checking here, and we actually know we're impulsive. Okay, scrap that. We are impulsive at that level, but we don't really have good structure for it. So keep an eye on that. It can't be triple zigzag, but possibly maybe I've got a count slightly wrong somewhere with an overextension instead. But it's looking like, based on that, we are wave 1, 2, down here for 3, up here for 4, down into 5. So we will be talking about these low numbers by the looks of it pretty well. Bringing this up into a daily time frame, bringing this down, obviously new lower low, we do see ourselves with the fair value gap a little bit deeper. There's actually quite a few fair value gaps a little bit deeper here, which could possibly occur. But for the most part, I'm looking for consolidation between 12 and 15 cent, like up in this range here. But we'll see how that kind of plays out. I don't want to kind of call too much of a low number. I mean, I've been calling 22.23 for a while. That's the line that's here, the yellow one here, 22.23. We actually hit a 22, and that was my original bear market low. But now I think we have to come down deeper, which is quite unfortunate. But you know, we'll see how it kind of plays out. For the most part, on our daily time frame, we're actually quite bearish. Weekly and daily are oversold though, so we are looking for a move to the upside. But it looks like we probably have to come down more towards those kind of 18, 20s, possibly even 15 cent at some point in the future for Cardano's ADA. Let me know what your thoughts are in the comments below. How low do you think Cardano is going to go? Let me know in the comments. If you found this useful, smash the like button. If you're new, subscribe. If you haven't joined us in Discord, check it out. If you're checking on looking for a new exchange on the fear that Binance might not be the one anymore, then why not check out the affiliate link for 𝗕𝗘𝗪 in the description down below. 𝗕𝗘𝗪 is my go-to platform at the moment. I do all my spot and leverage trading there on 𝗕𝗘𝗪 as well at the moment. So why not check it out? KYC is optional. It's not something that you have to do. So check it out. I will leave the video right there. If you have a fantastic day, I'll catch you all in the next one.
We are not financial advisors. None of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.